So this is a really sick video. Kind of go over a couple things here. A lot of my trades this week were traded outside of the sessions. Um, Not necessarily outside, because Asia, we were trading in the Asia sessions. I'm talking more so during the day. During the day, I saw the best setups kind of happen during new time, and not even just because of this one, but throughout the week too. Like I was catching my better trades at the end of New York PM and during the end of New York AM. So, and after New York AM. And kind of the reason why this video is so cool is because, it's like, this is why I love teaching you guys, because not only does it, it's awesome and I love to do it, but it helps me better my trading and to see the market better. And I only took one entry off of here and only saw the strategy form in one way, and that was this bullish one here, and I'll go over that in a second. But now looking back, you get two really good setups, and then you get this one over here that's a little scrappy that I'll go over, and I kind of want you guys to start seeing the market in this kind of way too as well. So this is gonna be a good video right here. So in the voice memo I was talking about, we want price to move true. So what I mean by that is we have this 45-minute fair value gap. We have this 45-minute fair value gap here. Get rid of that. We got the 45-minute fair value gap, and we have price on this downtrend, right? So none of this is here. We're on this downtrend. My eyes flipped to us coming into a retracement the moment I saw this strong close here upward. The moment I saw this strong close upward here in this rejection block, I wasn't betting necessarily against that. I didn't want to bet a short against a rejection block. So my eyes flipped to wanting price to move true, betting on price to move true. So I wanted to see us offer something to take us to that 45-minute fair value gap. And so like I say, with your bias before your session or your bias before your trade, this is what I wanted to see here. I wanted to see a bullish retracement into that 45-minute fair value gap to take profit. So looking back at it now, right, that's why I say I love going back over this stuff. You could have taken an entry short here and taken profit with a strategy, but it reverses right here on you. So I'll go over that. So say we were on the 45-minute and you were keeping an eye on it, and you were looking at it and you saw the candle was here with like 25 minutes left, and you thought we were just covering up this wick so that we could just rip down without a fair value gap, right? And you were betting on that short happening and leaving this fair value gap behind. So what you would have done or looked for is you get this reaction here. We get our first reaction in that fair value gap with our swing level zones, the 81, right? Because we're in New York. We're taking entries off these levels, or the 243 1.11, because obviously the 243 and the 81.0 is the exact same. So it's either this one, or 243. But the 243 low is down here. So just giving you a visual. So we're taking a short. We're betting on us leaving this 45-minute fair value gap behind. We get our first reaction downward. We get our liquidity sweep here, taking out this high. Now that we get that liquidity sweep there, we look on the 1 minute. Oh man, this is annoying. What do you get here? You get inverse fair value gap. Remember I talked about in the other videos, the CE, damn near paired up with it right there. You take your entry here, take profit at 81 ZQ, right? Because we're not targeting all the way across. We're going for guaranteed profit, right? So, you get your first reaction. We get the liquidity sweep. We get the break of structure happen here. We close past that low. We get the retracement in, and like I said, this move happens bang, bang. So it's boom, entered in. 3 minutes later, take profit. You got your win for the day. Like that's all you need. That's a huge trade right there, especially when the market's this volatile. All right. So that's the short that you could have got, necessarily lucky. Not lucky. I mean, it's a good trade, but it reversed immediately right after. So that's a good trade that you could have took there on the short, betting on it, continuing down forward lower. Now, the look that I had was this look, and it was kind of scrappier. Not necessarily scrappier, but it's kind of like, you're going to miss moves like this. Oh, so this is a good example I want to show you guys. Let me get rid of this. So my eyes were bullish, right? My eyes were fixated on looking for a bullish entry to target that 45 minute because I was betting on price to move true. That last one, you're not betting on price to move true. You're betting on price to leave the fair value gap behind. So, and that means after this, because if price was going to just continue down further, you would have seen this first reaction fair value gap move continue lower. But we didn't. We reversed up. That's what I meant by that. That's a better way for me to explain it. Our first move off that fair value gap, we went down, we got that past that low, but then we immediately reversed. So that was not a good sign, in my opinion. Or not in my opinion, that's just not a good sign. And so eyes flipped bullish. Where can I take profit? That 45 up there, and there's, I believe, the 243 EQ also up there. And so we got the 5 minute first reaction here. We get the liquidity sweep here. Boom. And then on the 1 minute, so I took my entry down here. You can see it on my TikTok. I took it down here because of this inverse fair value gap. And it was just, the maximized I don't know. For some reason, I had my order here. But even if you wanted to put your order here, I talked about having your stop at the low. You have your stop at the low here. Boom. Take off. Straight to TP. Right? And if you wanted to enter off the, the rejection block, you could have done that as well. But this is realistically where you would have entered off of. Boom. Straight to it. Right? And this is another example why I say we go to EQ. We could have taken the ride all the way across and taken profit, but it immediately reverses right after, and sometimes it won't touch that. And just like the one down there, it didn't go all the way down. It was real close, and then it reversed right up. So this is guaranteed profit. And that will take the stress off your mind with this kind of like risking a little bit bigger on this stop loss here with this trade. Is because you're not going for the big old grand prize. You're just going for 50% of the frame. That's it, or the range. You're going for 50% of the range, and that's it. That's all you're targeting. You're not going for the full 100%. And if we wait for price to offer us something awesome up in the 45 minute fair value gap, this is that kind of scrappy entry that I was kind of showing you guys. Or no, it's on the 7. No, it's up here. So, actually, let me go over this right up here. Actually, not, because I don't want you guys taking entries off that. I was going to say this. Remember that I talked about this little rejection block kind of deal that happened where the CE of this wick was paired up with this low. I don't want you guys taking entries off this. You see this right here? Because that is just, your first reaction liquidity sweep. Like, that's not solid. I would not bet your account or any kind of profit or loss on that. So we waited, and we get it's on the 5 minute. Get our first reaction. We get a huge liquidity sweep. We wanted for price to confirm more, so then we get our break of structure here. IFVG right here paired perfect with the level. Entered in, even with a 10-point stop here, you would have been bingo. Straight to TP. Like, this is how you guys need to start looking at the market, right? You need to start betting on it moving true. If you were betting on it moving true, you could have went 2 for 2 back to back here. If you took your entry off this inverse fair value gap there, right? So This is the strategy. You got it there, you got it there, and then you got it here. 3 times it showed up. First reaction, liquidity sweep, break of structure, inverse paired, boom, straight to EQ. Down here, first reaction, sweep, we got our inverse or fair value gap paired there, boom, straight to EQ. And then the same thing with that bearish entry that happened before. Just gotta trust this strategy for like 2 weeks. Just watch the market, see how it moves with this, you know, take, fake entries on paper trade or whatever, or if you've got an eval, run your eval. But this is very solid when you're working with the trend and and you're betting on price moving true. You will get your best setups, I promise. And when you're in the manipulations, you'll get stopped out, trust me, and it's fine. You're good. Like, this setup forms all the time. Like, this is why you guys got to be. That's why I created those rules with the sessions. I take some of my trades outside of the sessions, and that's just because I'm extremely comfortable in my trading abilities. And as you guys build market experience, you can expand your rules. But for the meantime, now, until you get really comfortable with the strategy and where market's going to go, stick with trading in the sessions, because that's when your highest probability setups will happen. All right,